let's break down where crypto prices come from: centralized exchanges, CEXs, and decentralized exchanges, DEXs. A CEX is like a crypto version of the New York Stock Exchange, run by a company, with your funds held by them, and prices set by the last trade in their order book. You trust the company to keep your funds safe, but they control the rules and can freeze accounts or halt trading. In contrast, a DEX is more like a self-running farmer's market on the blockchain. No company, no CEO, just code and smart contracts. Instead of an order book, DEXs use liquidity pools, where users lock up tokens to create markets. Prices on DEXs are set by formulas based on the pool's token balances, not by a central authority. When you trade, you interact with the pool, not another person. This removes the middleman and gives you full control, but also more responsibility. CEXs are fast and familiar, but you play by their rules. DEXs are open and community-driven but require you to manage your own assets. CEX prices are driven by speculation and news, while DEX prices are transparent and formula-based. Understanding this is crucial for Pi, which isn't aiming to be just another speculative coin. Pi's goal is different. It wants to build value through real utility, not just trading hype. That means it needs a new approach to price, one that fits its mission. The way Pi is valued must reflect its use as a currency, not just as a speculative asset. This sets the stage for why Pi's price needs to be determined differently from most other cryptocurrencies. Centralized exchanges are built for trading, not for real-world use. When a coin lists on a big CEX, its price often skyrockets or crashes, driven by traders chasing quick profits, not by actual utility. The price on a CEX is all about speculation, easily swayed by rumors, tweets, or manipulation. This leads to wild swings, up one day, down the next, making the coin unusable as a stable currency. For Pi, this is a huge problem. Pi aims to be used for everyday transactions, not just as a trading chip. If its price is unstable, you can't plan purchases or run a business with it. Worse, many CEX list Pi as IOUs, bets on future value, not real withdrawable coins. These IOUs are pure speculation, disconnected from Pi's actual ecosystem. It's like arguing over the price of an apple you've never tasted. The numbers you see on CEXs don't reflect Pi's real value or its community. They're just the result of gambling, not genuine economic activity. This misleads people and undermines Pi's philosophy of building value from the ground up. The CEX price is a distraction, not a true measure of Pi's worth. For Pi to succeed as a currency, its value must come from real use, not speculative trading. That's why relying on CEX prices is dangerous for Pi's future. Now, let's look at DEX, where code, not companies, sets the rules. Smart contracts on DEX can enforce specific trading rules, even fixed prices if the community chooses. Imagine a DEX for Pi that only allows trades at the global consensus value, GCV. This would anchor Pi's price to a community-agreed value, not market speculation. Such stability is crucial for a real currency. Businesses could price goods in Pi confidently, knowing its value won't swing wildly. DEX can be designed for speculation or stability. The choice is up to the community. For Pi, a DEX enforcing GCV would support its vision of a stable, useful currency. This approach lets the community build its own financial infrastructure, tailored to its needs. It's about using technology to serve the community, not outside traders. By anchoring Pi's price to real utility, the network can grow a healthy economy. The flexibility of DEX empowers Pi to define its own destiny. That's the power of decentralized pricing. For any currency to work, everyone must agree on its value, a stable unit of account. Imagine if every store valued the dollar differently, commerce would collapse into chaos. Multiple conflicting prices for Pi on different platforms create confusion and instability. A single, unified price, like the global consensus value, solves this. It gives everyone a common standard, enabling seamless global transactions. Pioneers anywhere can trade confidently, knowing exactly what their Pi is worth. This shared value is the foundation of a functional global marketplace. It transforms Pi from a speculative asset into a true medium of exchange. For a worldwide project like Pi, a single price is essential for fairness and inclusion. It ensures equal purchasing power for all users regardless of location. Without one official value, the ecosystem would fragment and lose its purpose. Consensus on value is what makes Pi a real currency, not just another token. That's why one price is a really big deal. The Pi white paper lays out why a single internal value is crucial. During the enclosed mainnet, Pi is protected from external exchanges by design. The white paper states, Pi is not listable on exchanges during this period, and you can't buy it with other currencies. This isn't a technical glitch. It's a deliberate strategy to prevent early speculation. The goal is to let the ecosystem grow through real transactions and utility, not hype. Developers build apps, and pioneers trade goods and services peer-to-peer. The value of Pi is meant to emerge from these real, internal exchanges. Any price you see on a CEX is not legitimate. It violates the project's rules. The core team wants value created from within, by the community. Following the white paper means ignoring speculative prices and focusing on building a stable, consensus-driven economy. The enclosed mainnet is Pi's no-fly zone for speculators. It's a protected space where the Pi economy can develop without outside interference. Only peer-to-peer and app-based transactions are allowed, no external exchange trading. This forces Pi's value to be set by its real usefulness within the community. The global consensus value can take root here, based on actual goods and services traded. If the community agrees on a value and trades at that rate, it becomes the de facto price. This bottom-up price discovery is critical for a sustainable economy. Opening to external exchanges too soon would destroy this foundation. The enclosed mainnet ensures Pi launches with a stable, community-backed value. It's the key to protecting Pi's vision and empowering everyday users. A currency's value comes from what you can actually buy with it, not just numbers on a screen. The US dollar is valuable because it buys real goods and services. Pi must do the same. Speculative trading doesn't create real value, utility does. Only transactions where Pi is exchanged for something tangible or useful matter. The global consensus value formalizes this principal value based on real-world use, not hype. By setting a high GCV, the community signals that Pi is meant for significant, meaningful transactions. This focus on utility separates Pi from thousands of speculative coins. Pi's foundation is built on real economic activity, not fleeting market trends. A consensus value rooted in utility is durable and sustainable. That's the kind of value speculation can never create. The global consensus value, GCV, is the community's answer for a stable Pi price. GCV isn't set by the core team, it's a grassroots movement. The most discussed GCV is $314,159 per Pi, but the principle matters more than the number. A single high value adopted by the community brings stability and confidence. Merchants can price goods in Pi without fear of sudden drops. This predictability attracts more businesses, creating a positive feedback loop of utility and stability. A high GCV also ensures fairness, rewarding early adopters and everyday users. It prevents latecomers or big investors from dominating the economy. GCV distributes wealth and power more equitably among pioneers. By agreeing on a value, the community defines its own economic reality. GCV is a declaration of economic sovereignty and aligns with Pi's decentralized ethos. It's the tool for building the stable, fair economy envisioned in the white paper. Let's wrap up. CEX prices are volatile and disconnected from real-world use. The Pi white paper warns against this, creating the enclosed mainnet to protect real value. Pi's mission is to be a decentralized, accessible currency for daily life, not a trading chip. Only a single, unified price, rooted in utility can make that possible. GCV is more than a number. It's a philosophy of value created by the community, for the community. It ensures stability, fairness, and equal opportunity for all pioneers. When you see conflicting prices, ask, which one supports Pi's mission? The answer is clear. The consensus value, not the speculative CEX price. For Pi to become the world's most used cryptocurrency, its value must be defined from within. The CEX price is a fantasy. The consensus value is the future.